Hey, I'm Phil McCaw from MOVAC.
So what does MOVAC do, Phil?
Well, we're an investment group based in Wellington, Tim. So we do early stage investment, so we've done a lot of startup investment, and we're just in the process of progressing into early expansion investment with a new fund that we're planning to open in April this year.
What got you into funding startups and high growth companies?
I'm going to say the Shawshank Redemption.
Is that a code? I'm trying to decipher this on the fly.
Shawshank Redemption, a great film. I remember a classic quote in the Shawshank Redemption was, "Get busy living or get busy dying." And I'd been sitting there, I was a consultant at Deloitte, so I'd worked there for 10 years. And it wasn't just this film, it was a bunch of other things in my life. And I thought, I don't want to be a consultant all my life. I want to be an entrepreneur. I want to prove that I can go out and do stuff. So in 1998, I left Deloitte and I started my own business. And but when we started that business, we went back to our knitting and it was all about consulting. So we started a consulting business. But we knew that wasn't what it was going to be about. We wanted to invest. So a bunch of us, we were like-minded. We knew what we wanted to do. We knew that consulting could generate us a bit of income. So we took that income and we started looking around for opportunity to invest.
Where did you start?
Well, first investment was our company in 1998. What was the second one? That would be the question. Yeah.
Do you think anyone can recognise, possibly?
Well, he might have been the third one. But yes, so one of those early ones was Trademe, and that's really given us the horsepower to do what we do today, and that's been great.
Hey, look, so it took a long time before lots of people recognised Trademe as a business. What made you recognise them early?
We recognised Sam early. Well, part of it was that I'd been working in the internet in the US, and I'd come back from the US, and so I'd been right at the forefront of watching that develop in the US. And so we built an internet team inside at Deloitte, and we were doing a lot of internet development and internet consulting. And Sam was one of our early guys that worked with us in that group. And so when we set up our business, and Sam joined us a year or so later. We knew that there were things like eBay and those other things starting to develop out there that could be massively scalable. We didn't know how big it could be. We did some models. We thought it could be about a $20 million business. So we kind of got that wrong. But we just, we're right at the forefront of technology, and if we could get this thing right and just work it, that there was a chance there.
So you mentioned you invested in Sam, so you invest in people, not businesses?
No, we invest in people and businesses, and those two things have to come together, and they're needles in a haystack. But the great thing that's going on in New Zealand at the moment is the talent is just getting better and better and better. More experienced, we're finding second-time entrepreneurs now. There's a recognition that this lifestyle, if I can call it a lifestyle, is something interesting for people to do. And I'm really excited about what I see out there at the moment.
So you mentioned going from startups now to more high growth.
Yeah, the reason for that is that when we started out, there was no startup investment. Now we've got angel groups, and that's great. And they're starting to take the risks that we were taking 7 or 8 years ago. But now we've got little or no expansion stage capital. We don't have anything in that next tier where we need sort of $2 to $5 million to take a company offshore. So that's where we're trying to go, because that's where we think the need is in the market now.
How does the money move from your side, Phil? Is it all money of MOVAC directors? Do you source other capital as well and mix it together and de-risk it for them?
So, up till now it's primarily been MOVAC directors, but in that we've worked collaboratively with a lot of other investors in the market. So we've done a few deals with Sam, we work with Stephen Tyndall, we work with Simon Holdsworth from the Vander Group, and try to pull that capital to de-risk it, as you say, so that we're not the only ones doing the heavy lifting. And there's a lot of collaboration in the New Zealand market now, which is good. And with the next fund that we're trying to do now, it's MOVAC and anyone and all the other best New Zealanders that we can get in to come and work alongside us on that one. So, yeah.
And so what makes a good entrepreneur and a good business model right now in today's market in 2011?
Good entrepreneurs got balls, got stickability, got gumption, prepared to go the hard, long yards. Ideally coachable, but that's an oxymoron for the other things that I just said. So, we put up with a lot of shit as investors, and the entrepreneurs feel like they put up with a lot of crap from us. Good business model. It's tough, highly scalable. Markets that we can see and touch, clients that are already there, So that goes with the entrepreneur as well. Go and win clients before you come to us with product, So yeah, I mean it's hard to say there's any one size fits all in that particular market. But if we can see the ability to scale, we can see an entrepreneur that knows what they're talking about, running all the right metrics, can figure out how to sell a product, can figure out how to listen to their clients, doesn't have all the answers, that's probably stuff that we like.
You mentioned that coachability. Is that something you think that there's a bit of a challenge out there for entrepreneurs in New Zealand? Is it an early skill we haven't developed or experience we haven't developed?
I think it's an age thing, so it's, with age comes experience and ultimately there comes some wisdom. I keep saying to people, I'll be absolutely brilliant the day I die. And the younger they are, the less coachable they are, and the more lessons they've got to go through life listening. So they've got to go through life and learn. Coachability will be great. We find good coachability post 40. We find very, very poor coachability pre-30. So, it is what it is.
Do you think there's going to be a dramatic change in the types of businesses we develop in the next 10 years, or is it going to be a slow burn? Tim, you're an IT guy, I'm an IT guy at the end of the day. I think, we see more and more really good quality internet mobile opportunities coming out of New Zealand. They didn't exist 5 years ago, so that's been a dramatic change in the last 5 years. And the internet's something we can do really, really well from New Zealand. One of the challenges I wanted to put out around, and I haven't done this yet, around broadband in New Zealand, you look at things like Pacific Fibre, the government to the home broadband. What are we going to do with broadband? How do we become an exporter of content to the world? That's the opportunity that's been baked up for New Zealand at the moment. We've got one of the world's best production houses for film in the world. We need to sort of grow those sorts of things and find a way that New Zealand can perform on a world stage with new digital media. I think that's the big opportunity for New Zealand. So on the content front, you're talking about content created and hosted out of New Zealand too?
It doesn't have to be hosted out of here. I don't care where it's hosted at the end of the day, but we are building these big pipes. I mean, we don't want to be just importers of content. We've got to find a way to export it, So, we can get a start by hosting it here and doing those sorts of things, but we shouldn't be building server farms, that's not going to be New Zealand's mojo. It's going to be the creative industry, and it's going to be, I don't know what it's going to be, but creative industry is an obvious place to kind of start.
Hey, so where does the Icehouse fit in from your perspective? What does it mean to you, and what do you think it's doing for New Zealand?
Well, I had two companies go into the Icehouse in 2001, and we're talking about the 2011 party now. So the Icehouse has been huge in terms of the development of the early stage ecosystem in New Zealand. So, I've worked with these guys for the last 10 years. I've watched what they've done in terms of the development of this ecosystem and the professionalisation of this ecosystem, and all the support that they bring to these sorts of to young New Zealand companies, and I think it's been fantastic. Next 10 years, so I don't know, more of the same. I think one of the things that the Icehouse does really, really well is connecting New Zealand companies increasingly globally. I think that they can up what they do in that regard, and probably there's an offshore Icehouse. That'll be a place where New Zealand companies exporting into the US or up into the UK go into the Icehouse in the US. Why do we have to go into Y Combinator or all these other guys? Let's make it an Icehouse in the valley.
So Sam Morgan's talked about that recently, I think, underwriting a lease up there. Do you think, is that the kind of thing you're talking about?
Well, yeah, I don't know. I mean, Andy might go into business with those guys and do something like that, which would be great. Yeah.
What does the future look like for Phil McCaw? Are you going to drive MOVAC and get these, earlier stage businesses pumping now?
We've got to prove as investors that early stage investment works. So my goal for MOVAC is quite simple. It's to create a sustainable investment ecosystem. Because we've got stages that people have to go through in terms of raising capital, and at the moment in New Zealand we do not have a sustainable early stage investment ecosystem. So we've done a good job of building the entrepreneurial side of the system. My job, or part of my job along with a bunch of others, is to prove that we can make the investment side work. You've got to get both sides of that equation humming. If we do, country will prosper. And you know, what I want is a prosperous country.
Some numbers. What would be a startup? What would be an early stage in terms of customer numbers, revenue numbers?
Look, startup is probably no revenue, anywhere up to $500,000 in revenue in my language, and lots of people have different language in this regard. Early stage expansion from our point of view is $500,000 up to maybe $5 million in revenue, maybe even $10 million in revenue. What we're fundamentally interested in when we look at early expansion is the validation that we can find in the model that it will scale. There's still risk in it, but it's validation that it will scale. And you know, there is an issue around exit alignment, you know, because we're in the job of returning money to our investors, and by doing that, we will recycle money and bring more money into the system. So we're looking for businesses. We've got confidence that we can exit in a reasonable amount of time, which is at least in our lifetimes, not someone else's lifetime.
Hey, just quickly, online video, web video, what do you think it is in relation to online marketing? Has it been working for you and your businesses? Is there a future in it?
Oh, there's a huge future in it. I've got an investment in it.